Infosys
was one of the top employers.
India-based tech services and consulting giant
company has upped its commitment to hire Americans for jobs.
In terms of hiring, we have plans of recruiting approximately 15,000 college graduates in India and approximately 1,500 college graduates outside India across multiple geographies. We are extremely proud that we are carbon neutral here in 2020.
As long as all of us in the tech business can switch to where our clients' demand is, I think there's a bright future for us.
Good evening, everyone, and wish you all a very happy new year. Thank you for joining Infosys Q3 FY21 financial results. My name is Garima, and on behalf of Infosys, I'd like to welcome you to today's press conference. Before we begin, I want to take a moment to remind our attendees of a few guidelines. All journalists will be on mute by default throughout the press conference. You will be requested to unmute yourself when your name is announced for asking a question. In case you get disconnected, please rejoin using the same invite link. With that, let me invite Mr. Salil Parekh, CEO Infosys, to give us some highlights of the quarter gone by. Over to you, Salil.
Thanks, Garima. Good afternoon. I trust each of you has had a great start to the new year and continue to be safe and healthy. I'm delighted to share that we've had an exceptionally strong quarter across multiple dimensions. This was made possible by the enormous trust of our clients and our extreme focus on digital and cloud. Let me share with you some of the highlights. We achieved the highest large deals win in our history with a deal value of $7.1 billion. This includes the largest deal we've signed in our history and what we believe the largest deal in the history of the Indian IT services industry. Our overall large deal value for the 9 months of this financial year is over $12 billion, and our net new large deal value for the 9 months of this financial year is over $8 billion, positioning us very strongly for the quarters ahead. Revenues in constant currency grew at 6.6% year-on-year and 5.3% sequentially, allowing us to continue to gain market share. Digital revenue grew at 31.3% year-on-year in constant currency, and we have now crossed a significant milestone in that digital is over 50% of our business today. We delivered an operating margin of 25.4%. Looking ahead, we continue to see a momentum in our business, strong market share gain, and increased speed of digital transformation for our clients. With that, we increased our revenue growth guidance for the full year from 2% to 3%, which is what it was, to 4.5% to 5% growth in constant currency. We also increased our operating margin guidance for the full year from 23% to 24%, which it was, to 24% to 24.5% for the full year. Thank you, and now let's open it up for questions. Back to you, Garima.
Thank you for sharing that with us, Salil. We will now open the floor for Q&A. alongside Salil. We have with us Mr. Praveen Rao, Chief Operating Officer of Infosys, and Mr. Nilanjan Roy, Chief Financial Officer of Infosys.
Hello. Hi. Good afternoon and Happy New Year to everyone.
In the interest of time and to give everyone an equal opportunity, I would like to request our media friends to stick to one question per leader only. It's now time to take the first question of this evening. Our very first question is coming from Sajid Mangat from Bloomberg Quint.
Good evening, gentlemen. Hi. Good evening, gentlemen. My question to Salil is with respect to the IT spend. You've given us a very bullish guidance for revenue, and which is increasing to 4.5 to 5% there. What brings you that confidence? And with respect to the IT spend for your clients, are you seeing a really big jump coming in IT spend when you go to 2021, 2022? For Nilanjan, my question is with respect to the operating margins. If you can give us some color with respect to what gives you the jump or the color of the jump in the operating margins which you have posted for Q3 and the guidance which you have given there. And on the segmental revenue for Mr. Rao, if you can give some color on some of the sectors or segments, especially BFSI space. If you can give some idea of how this space is growing and what kind of orders you're looking at it.
Thanks for that question. In terms of what we're seeing with the technology spend and therefore the guidance, where we see a lot of our large enterprise clients now looking at, there's a huge move to accelerate digital spend, to do more things on the cloud. And we see that with all of our investments over the past, we are now ready to participate and play in this trend massively. We've made sure that all of our capabilities are ready for this. And then with some of the large wins we've had, some of the numbers we've shared, over $12 billion in large deal wins. These are large deals over $50 million in size each. And the $8 billion in net new, we feel more and more confident about the quarters ahead. Over to you, Nilanjan.
Yes. So on the margin front, we are at 25.4% for the quarter. And at the same time last year, we were at 21.9. So this is a 350 basis points improvement in margins. As we mentioned previously in the year, when COVID started, we had a three-pronged strategy on looking at our cost structure. The first one was about deferral of costs, which was largely around hikes, promotions, and even recruitment. And as the confidence in the business has returned over the last 3 quarters, we sequentially eased this tap as well. And as you all know that we are going to roll out our compensation hikes from Q4. On the discretionary side, we continue to see travel and other costs related to that being very low. So that's helped us, and some of that will be permanent in nature, but some will start unwinding. And finally, of course, our strategic levers, which we continue to accelerate on each year around our pyramid, on-site and offshore, around automation, around our subcon costs. We will continue to work on that. And all led to this 3.5% improvement in our margins on a year-to-year basis. And that gives us the confidence as we look even into the Q4, and despite the hike, that we can raise our guidance from 23-24 to 24 to 24.5%.
From a segment perspective, it's been a broad-based growth. All the sectors on a year-on-year basis had positive growth, barring manufacturing. With 3 of the sectors, BFSI, high-tech, and life sciences had double-digit growth. Even on a quarter-on-quarter basis, all the segments had very strong growth, again barring high-tech, which was aberration. From a BFSI perspective, this has perhaps been one of the strongest quarters, both on a year-on-year basis as well as on a quarter-on-quarter basis. As I said, we had double-digit growth year-on-year basis and a very strong performance on a quarter-on-quarter basis. The growth has primarily come from 3 dimensions. One is ramp up from earlier deals, large deals that we had won. Second one is ramp up on new accounts that we have opened in some of the sub-segments like wealth management and retail services, mortgage, and regional banks. And the third area is accelerating the digital spend of our customers. We continue to see a lot of opportunities in digital, in data services, in cloud, and as well as in trying to build capabilities to enable digital banking. The other standout segment to me has been manufacturing. While on a year-on-year basis it was still negative growth, it was a very strong performance on a quarter-on-quarter basis. And we also had a large deal win, strong large deal wins in this segment, including the largest large deal win we had in the history of Infosys. So we feel very positive about the growth, even though the segment by itself is soft and having a lot of challenges both on the demand and supply side. Despite that, I think we have done extremely well this quarter, and we expect that momentum to continue.
Thank you.
Thank you for those questions, Sajid. We will now move on to our next question, coming up from Kushal Gupta from Z Business. Kushal, could you please go ahead after that?
Yeah. So good evening. मेरा सर सबसे पहला सवाल सलील सर आप या मतलब जो प्राइसिंग फ्रंट है, क्योंकि अभी हम देख रहे हैं कि डिजिटल ट्रांसफॉर्मेशन जो है काफ़ी सारी कंपनियां जो है आईटी कंपनियों के पास जा रही हैं, तो उस सिनेरियो में जो नए क्लाइंट्स हैं, पुराने क्लाइंट समझ सकते हैं वहाँ पर आपका जो रिलेशनशिप है उस वजह से मे बी प्राइसिंग डिफरेंशियल उतना नहीं हो पाएगा, पर फॉर द न्यू क्लाइंट्स बेसिक डिमांड सप्लाई डायरेक्ट वर्क वहां पर हम ये जानना चाहते हैं कि यहाँ पर क्या प्राइसिंग डिफरेंशियल हमें देखने को मिलेगा नए क्लाइंट से। दूसरा सवाल मिस्टर नीलांजन के लिए, जो ऑपरेटिंग मार्जिन्स हैं, द गाइडेंस जो आपने दी है 24.5% की, यहाँ पर जो ट्रैवल कॉस्ट है अब जैसे पैंडेमिक रिड्यूस हो रहा है वो फिर से हो सकता है कि रीस्टार्ट होता हुआ दिखे, तो मार्जिन्स पर हल्का सा इम्पैक्ट आगे आने वाले समय में क्या हमें देखने को मिलेगा, तो वो दूसरा सवाल है। और सवाल मिस्टर राव के लिए है, और यहाँ पर जैसे कि हम है कि 95% से ज्यादा लोग जो है अभी भी पेंडेमिक के बाद घर से काम कर रहे हैं, तो आगे के लिए हम हाइब्रिड मॉडल की तरफ देख रहे हैं, और अगर हम देख रहे हैं तो कितनी परसेंटेज हम एक्सपेक्ट कर सकते हैं कि परमानेंटली घर से काम करेंगे।
So thank you. पहला जो सवाल था pricing का, let me start with that. Pricing, what we are seeing is for digital work, we definitely see that there is more value that clients are putting to it, and we can see that new digital work over time, if we work at how the projects are being constructed, will give us that benefit of the value. For what we are doing today, overall the pricing is stable, as you've seen in the results, and we feel broad-based. The discussions with clients is not focused in a negative way on pricing. It's neutral and sometimes positive. So overall on pricing at this stage, we're quite comfortable. Over to you, Nilan.
Yeah, so Kushal, on your question on travel, yes, as we mentioned earlier, we've seen a dramatic reduction in our travel costs. And in one way, it's very amazing that we've been able to, strike $7 billion of large deals pretty much on a video call. So that just goes to show the confidence our clients have, in engaging with us in this virtual mode. But having said that, as the vaccines are rolled out, we would like to travel. I think there's nothing better than meeting face to face as well. There could be an impact of that in the future, but work from home and some form and shape is here to stay. And I think there will be some benefits in the long run on that. Now, having said that, like I said, we have a lot of cost levers which we continue to push aggressively on, which will be able to help us as well as some of these costs come back.
On the model per se, today we have 97% of the people globally working from home. It's difficult to really predict what the percentage eventually where it will settle down in the new normal. Our endeavor is to build a hybrid model where people will have the flexibility to either work from office or work from home. And it is not the same set of people who are always working from home or always working from office. It will depend on their personal context. It may depend on the client context, nature of projects and other things. So we are trying to build a capability where we can flex seamlessly between work from home and work from office. And to a large extent, we have demonstrated that in this pandemic. So we are less concerned about the exact percentage. Our endeavor is to ensure that we have the flexibility. Everyone has the flexibility to either work from office or from home, depending on where they want to be, client context and their own
Thank you for the answers, gentlemen, and thank you for the question, Kushal. Time to move on to our next question now. It's coming up from Reema Tendulkar from CNBC TV18. Reema, please unmute and go ahead.
Gentlemen, congratulations on a very, very impressive quarter. I have a few questions. One, if you could share what is the outlook for FY22? What is growth rates likely to be? And last quarter, when you had upped the margin guidance, you said that those kind of margins are not sustainable. Yet this quarter, you've gone ahead and upped your margins. So what is driving that, and what could be the sustainable margins going ahead, especially once travel costs, discretionary spends come back? And on your budget, if you could throw some more light, how do you expect it to be? And on deal wins, are you winning from competition? If yes, how much of your deal wins would have been, won from competition? And how much would it be on account of more deals being in the market? Thank you.
Thanks for those questions. Let me start off. I think for next year, we remain extremely confident. We clearly see that we will have double-digit growth in the next financial year. We have a strong set of deal wins, very good momentum, and good outcome for this quarter as well. So overall, our business is looking in quite a healthy shape at this stage. On the margins, Nilanjan will come back and give you some color on that. On the market share, we clearly see we're gaining market share. We had 6.6% year-on-year growth in constant currency. This growth is just, in this environment, very strong. And we can see it's really leading across the industry in many parameters. So we feel confident that we're gaining market share as well. On the margin, Nilanjan, over to you.
Yeah, so Reema, just as I mentioned to the previous question, we are about 350 basis points higher than last year for the same quarter in terms of margins. And we were very clear as we started the year that this was going to be a very highly unusual year. And in our entire cost strategies, we looked at it in three buckets. One is, of course, what we call the deferrals of our cost hikes, which could be promotions, which could be just pure recruitment, and of course, compensations. And as the year has progressed, we have continuously opened up these taps as well. So, in fact, hiring started with Q2, promotion started in Q2 and Q3. And in fact, in Q4, we're going to roll out our compensation across the board. So that's something we realized, which will come and hit us back. On the other discretionary costs, whether it's on marketing, whether it's on our brand building, whether it's on travel, those have come down, as you would understand. But again, once the pandemic eases, we think some of those costs will come back as well. But our strategic cost levers, which is something every year we are very, very conscious of, and it's a very tight program we run across our pyramid, across our automation programs, on-site offshore mix, subcontractor costs, operating leverage. We continue to drive on that. So we are at 24.5% for the first 9 months of this year. We will have the impact of the compensation. But as we look on to next year, I think we're also confident that we have a tight cost optimization program. And we'll come back with more details on the margin as we go into the next financial year.
Thank you so much for the questions, Reema. We will now move on to the next question. Coming up from Chandra Ranganathan, CT Now. Hi, Chandra, please unmute and go ahead.
Hi. Happy New Year to all of you. And Salil, congratulations on completing 3 years at Infosys. I think it was on January 2nd, 2018 that you took charge. And weeks after taking charge, you said you would need 3 years to transform Infosys. So would you say you've met that goal, or are you perhaps, 1 or 2 metrics short of that? How would you describe the first 3 years and perhaps the next year? And 2 huge deals that you've got in the last year. One, of course, is Vanguard and Daimler, which is supposedly the largest in IT history, as you said. I hope you can also give us a number for that deal. But are there more of these billion-dollar deals in the market now? Will we see more of this opening up? And will this come from continental Europe in particular, which is turning out to be a strong market? Nilanjan, a question for you. The nature of deals is also changing. A lot of these deals entail absorbing employees from captives, from these companies. What impact will this have on margins? Will they be margin dilutive? And finally, Praveen, coming to you, I believe you're retiring at the end of this year. So will you seek an extension? Have you started looking for another COO? Will it be an internal candidate? Some details on that. And also, what percentage of your employees are currently working from home? Thank you.
Thanks, Chandra, for those questions. In terms of the 3 years, I think we've achieved really a comprehensive set of transformation activities within Infosys. To give you a couple of examples, with 50% of our work being in digital, it really demonstrates from where we've come to where we are and how clients are perceiving us. So that's just one example. There are many, many other parameters. Our growth today is really leading industry. We're winning market share. Some of the large deals, whether it's on digital, on cloud, on data analytics, they show the comprehensive nature of how Infosys is working in strong partnership with clients to make all of this happen. And finally, I think all of us within Infosys are working in a very strong, unified way, in a cohesive way, in a very difficult environment as we've all seen through this crisis. And that's given us an extreme level of confidence to go out in the market as the world opens up again. So yes, it's been a good 3 years, but there's always more things to do, and we look to do more and more for our clients as the time goes on. In terms of what we see for next year, the business momentum itself remains extremely strong, as I shared earlier. And overall, we continue to see the market share gain coming into us, and we continue to see this type of momentum within our business. Our pipeline is still strong. Of course, as we've always shared, these sort of large deals, they're more volatile. They come in some quarters and not in others. But if you look at much more of an annual cycle, we remain confident of the nature of client interactions and engagement we will continue to have. Let me pass it on to Nilanjan first, and then Praveen will come back with those other questions.
Yeah, thanks, Salil. That's a very good question, Chandra, on the margins. As you know, of course, we operate with a portfolio. There's a portfolio of large deals, small deals. There's a portfolio of newly won deals and deals maturing. So when we're looking at large deals, and of course, from day one, when clients expect savings, initially there is going to be a pressure on margins. But over the life cycle, we know that there's a lot of the cost optimization levers which we have, which we can deploy, and we've learned that over our 25 years of history, whether it's automation, whether it's on the on-site offshoring, whether it's on the pyramid. And therefore, when we look at the deal life cycle, we definitely would like to see these large deals moving towards the overall portfolio margins. And our numbers have shown that over the last few years, whilst we've also ramped up large deals, we've also seen our margins going up. So this is something I think the company has really to run it like a tight ship. Of course, we have one-offs once in a while. Initially you may have some rebadging costs, etc. But overall, in the life cycle of the project, I think we're very, very confident on where the margins are headed.
Yeah. On the retirement question, it's 1 year away, so I'm not really focusing on. 12 months is a long time. And in terms of work from home, today we have 97% globally working from home. It's about 98.3% in India.
Sorry, is it 90.98 or 97.3? I'm sorry, I didn't get that number.
97% globally, 98.3% in India.
Thank you for the responses, gentlemen. Next up, we have an audio question coming from Sharad Dubey from the Awaaz.
So, congratulations सर, आपकी तीसरी तिमाही की रिजल्ट्स बहुत शानदार थी और आपके रेवेन्यू और मार्जिन्स में भी बहुत अच्छी बीट दिखी है. तो मेरा पहला सवाल है सलील जी से कि जो डिजिटलाइजेशन में अक्रॉस द बोर्ड आपका ग्रोथ देखने को मिल रहा है और जो कैलेंडर ईयर 2021 में बजट्स हैं कंपनीज की, उन आईटी बजट्स में भी 3 से 5% की ग्रोथ देखने को मिलेगी, तो आपको क्या लगता है कोई लार्ज डील के जो अनाउंसमेंट्स आ सकते हैं, स्पेशली जो आप रिन्यूअल बेसिस पे देखें या वेंडर कंसोलिडेशन पे? और मेरे प्रवीण जी क्वेश्चन है कि जो क्या बोलते हैं क्लाउड के जो डील्स हो रहे हैं स्पेशली यूरोप में, तो क्या उसमें क्लाउड के जो जितने डील से ज्योग्राफीज में सबसे ज्यादा देखने को मिल रहा है, और जो डिजिटलाइजेशन का जो थीम जो चला आ रहा है कोविड के टाइम से, तो कितना इम्पैक्ट देगा? और आखिरी क्वेश्चन है मेरा निरंजन जी से कि जो मार्जिन्स है, तो मार्जिन्स में जो गाइडेंस आपने बढ़ाई है, जो ट्रैवलिंग कॉस्ट में देखने को बढ़त मिलेगी और जो अनलॉक ओवरऑल वर्ल्ड में होगी, तो उसके भी एक्सपेंसेस फैक्टर इन होंगे, तो क्या आप कोई एक नया प्रोडक्ट मिक्स को चेंज कर रहे हैं कि आप वो मार्जिन्स को उतना उठा पा रहे हैं कि कोई ऑफसेटिंग रीजन होगी? तो जेंटलमैन, ये 3 क्वेश्चन है आपके लिए।
So thank you for the questions. जो पहला सवाल था in terms of the demand. The demand environment for calendar year 21 and the budgets are looking quite robust, especially when you look at the digital transformation agenda of the clients. What we are seeing is through the crisis of the last 9 months, there's been an acceleration where large enterprises are looking to spend more to make sure that they are better prepared in the digital world. And to that extent, all of the capabilities that we have built up, whether it's on cloud, on experience, on data analytics, on cyber security, on AI and automation, all of those we can see a great interest from the clients, and many times for a combination of all of them to give us the large deal construction. So we feel quite confident today that this will continue in the calendar 21 outlook. With that, I'll pass it to Praveen.
Yeah. Yes, Salil mentioned today we are seeing a lot of digital transformation, and in this pandemic, we are only seeing acceleration of it. Cloud is actually foundation to drive digital transformation. It's a foundation to drive agility as well as drive innovation in the environment, in the ecosystem. So you will see a lot more of plans across industries, across geographies, migrating workloads to cloud, embracing and adopting cloud in a big way. It so happens that in this quarter we have seen a lot more of those opportunities in Europe region, but it's not a secular trend. You will continue to see opportunities across the board in other geographies as well and across segments. As I said, it's foundation for clients in terms of driving agility and building resilience in their own operations.
Yes, on the question of margins, as you know, we are at 24.5% for the first 9 months. Previous guidance was 24 to 20, from 23 to 24%. Yes, we have upped that up from 24 to 24.5%. We think we can achieve this higher guidance despite the pay hike, which we've announced from 1st of January we'll roll out. And like I said, we have a lot of cost levers we continuously deploy. So we are quite confident in the new guidance.
Thank you so much. We will now move on to the next question. It's from Stuti Roy from PTI. Stuti, please go ahead.
Hi, I have 2 questions. First is on the strong deal momentum that you're seeing, the pipeline being strong. Are there specific verticals and geographies where you see these, big deals coming from? That's one. And second is on the attrition that's come down to 10%. But given the kind of rebound that we are seeing, is this likely to change in the next few quarters? And if I can get some insights on what sort of hiring could we see in 2021? Thank you.
Let me start off, and actually Praveen will be able to give much more color on all of those 3 points. On the large deals, we are seeing it across different industries today. We, as Praveen mentioned earlier, we have seen good traction in financial services, in telecommunications, in high tech, of course in manufacturing, and so it's quite broad-based. And even as you were just saying, in geography, we'll see across different geographies in the geographies we operate. Let me pass it on to Praveen, and he can go into it much more on all the key points.
Yeah. From a large deal perspective, again, as Salil mentioned, it's been broad-based across verticals. In this quarter itself, when you look at $7.1 billion large deal wins, we had 22 wins, out of which 13 were in North America, 7 was in Europe, and 2 in rest of the world. And from a vertical perspective, we had 8 in financial services, 4 each in utilities, energy, resources, as well as in manufacturing, and 3 was in communication, and 1 each in high tech and retail. So we expect this pattern to continue. The pipeline is pretty strong, and we will continue to see large deal across sectors and across geographies as well. And from an attrition perspective, yes, the attrition has increased from 7%, 7.7% to 10%. And this is on the back of demand environment that we are seeing. And it's likely that given strong demand across board, this attrition could probably inch up over the next couple of quarters. As we have consistently said, historically we have had attrition around 13 to 15% band, and we are comfortable with that band. So my sense is over the next few quarters, it could probably increase beyond 10%, but we are fairly comfortable in dealing with the situation. And in terms of hiring, this year, from a fresher perspective, we will end up in hiring about close to 17,000 people. I'm talking about FY21. In FY22 in India, we are looking at about 24,000 campus hires. And this number, you have to also keep in mind, one is, of course, part of it is to backfill potential hike in attrition. But also, we have one of the record utilizations in this quarter, 86.3%, highest in our history. And this is not the utilization we are comfortable with. We want to bring down utilization as well. So consequently, you will see probably increase in hiring to bring down utilization to manageable level.
Thank you so much. The next question is from K. Giri Prakash from the Hindu Business Line. He couldn't join us virtually, so I'm going to read out his question. His question is for Salil. With physical activity across most economies and industries already reverting to pre-COVID baseline levels, there is a likelihood of reversion of traffic from digital to physical channels. Will that lead to a recalibration in IT spend?
So that question, thanks for that. The way we see it today is large enterprises are building their technology infrastructure for a world which is both digital and what we call the physical world. In doing that, they are really accelerating the way that they want to do all of their digital transformation. Take the example of cloud. Even when a large enterprise uses private cloud or distributed hybrid public-private cloud environments, the thinking is it will enable all of the digital activity, meaning their end customers using it digitally, remotely, their employees working remotely. But it will also support, of course, the world where people are much more connected and not only digital. So my sense is that move, that change is progressing quite rapidly. And of course, we are looking for all the economies to come back and all of the activity and the physical connects to resume. But that will still support the acceleration of the digital transformation journey.
Thank you for answering that question, Salil. Our next question is coming up from Swati Murthy from Money Control. Swati, please unmute and go ahead. Hi, Swati, can you hear us? Okay, looks like there is a connection problem. We'll get back to her a little later. We can now move on to the next up, which is Megha Mandavia from the Economic Times, please.
Hi, thank you so much for taking my question. I wanted to ask Mr. Parekh that 3 years ago you had set a 3-year plan for Infosys, to stabilize and to grow the company. So when can we expect the next 3-year plan for Infosys, and how will the COVID pandemic change or shape that plan? Secondly, I wanted to understand in terms of deals, what percentage of those deal wins are digital transformation deals? And thirdly, I wanted to understand that will rebadging continue as a part of your large deal win strategy, and how will it impact employee costs? Thank you.
So let me start with the first one. As you rightly said, we laid out a 3-year roadmap. Our strategy really, which is focused on accelerating digital, focused on automation, making sure that the reskilling of our employees and now the reskilling of our client employees continues, and localizing in all the markets that we operate in. That strategy is really gaining lots of traction over this past 3 years, and we continue to see that strategy working well for us. In terms of the roadmap, we can see the 3rd year we have talked about acceleration. Of course, we had the COVID situation for a few quarters, which has come in the way of the full acceleration. And we can see again today the acceleration resuming with the type of large deals that we are seeing. We are already working on how we're going to lay out the blocks, the roadmap for the next few years. But from a strategic perspective, the focus on digital, the focus on cloud really remains as intense and as relevant for our clients today. The second point, Praveen will come back to in terms of large deals and rebadging. I'll just make one comment and then pass it on to Praveen. Yes, those are part of what we do when we have large partnerships with clients. It also is the way that some elements of our localization builds out. And because the way we are building the pyramid in all of our geographies, it helps us as we're constructing some of these large deals. With that, Praveen, over to you.
Yeah. See, when you look at large deal, it's not only about taking over the client IT assets and operations, but it's also about transforming the landscape. So there is an element of transformation in every large deal. So from that perspective, there's an element of digital in every large deal. So we don't really, at least in the domain, we have not really published what is the percentage of digital. But overall, the fact that our digital is growing and much faster than rest of the services, and this quarter it was 31% plus, and today it's about 50% of the revenue, and it continues to grow. It's a clear reflection that a significant part of the growth is coming from large deal wins, and a significant percentage of large deal wins is digital.
Thank you so much. We'll now move on to the next question. It's coming from Sarita Rai. Hi, Sarita. Please unmute and go ahead.
Thanks. Hello, gentlemen. It looks like it's a really good moment for India's IT services industry. Large deal wins, billion-dollar deals, best ever order pipeline, return to double-digit growth. Somebody described it as a renaissance moment for India's IT services industry. Salil, I'd like to ask you, what would you say about the industry itself, and how would you describe, Infosys's outlook vis-a-vis the pandemic and what it's done for Infosys? And for Praveen, I have a question. You've talked about hiring thousands of employees in FY22, but there's also a hybridization of work going on at the same time. Infosys does have a large real estate bank. You have large assets. Is there any sort of attempt to rationalize your real estate assets? Praveen, those are my questions. Thank you, gentlemen.
Thanks for that question, those questions. I think in terms of how we see the tech industry, there's really a secular trend in the way large enterprises are looking at how they need to use technology. So technology has gone from being simply a method to improve process or make things efficient to drive growth for their businesses. And a lot of that is through their own digital connect with their end customer. So from our perspective, we see that as a positive outlook for the industry. What we think happened in the COVID duration and obviously still going on as the vaccines are getting rolled out was initially there was a huge impact across all the Western economies. And then several large enterprises started to accelerate on how they can connect digitally with their end customers. And given our capabilities and skill sets, we got to participate in many of those digital journeys, which is what has really helped us. With that, let me pass it to Praveen for the real estate.
Yes. See, as we have been saying, while today it's significantly work from home, in the future it will be a hybrid model with flexibility to work from home and work from office. But at this stage, it's very difficult to have a handle on what percentage of people will really work from home and work from office, whether we can have hoteling kind of concepts within the office, where clients will be open to that. So there are a lot of unanswered questions, so we'll have to wait and watch from a real estate rationalization perspective. What we have done though is wherever we have had offices on rent or lease, we are trying to see if we can get out, and wherever it's coming up for renewal, we are not renewing it. And we have also slowed down on infrastructure expansion. But anything more to do from a radical plan perspective, we have to wait for the new normal and get a sense of how it will look like before we can take any concrete steps.
Thank you so much. Let's take the next question. It's coming from Rukmini Rao from Business Today, please. Hi, Rukmini, please unmute yourself and go ahead.
Thanks, Garima. I have a question each for Mr. Parekh and also Mr. Rao. Congratulations on the great set of numbers. But Salil, given that now digital revenues are over 50% of your overall revenues, would it be possible for us to give a sense of, the spread out of these digital deals vis-a-vis your business verticals, and also the repeat business, if you're looking at it, it has come down to about 95%. So how do we read this? Are the newer deals of a shorter tenure, or is this an indication of the larger base for which this has come down? And also I think we can go ahead with these two questions, and then I'll ask Praveen the next question. Thank you.
Okay. I think the way we see the digital growth, we are extremely delighted first that it's crossed over 50%. It really shows that the transformation that we had launched is giving us strong results and benefits. We are not, as you've seen from what we've announced, splitting that across the various industries or segments. And we also at this stage externally are not breaking it up into the various components of digital. But we are extremely delighted that growth of digital is very strong, and it's crossed over the 50% part at this stage. Please go ahead with the other questions for Praveen.
So also some bit of sense on that repeat deals. How do we read into that?
On the repeat deals, I think we see the way that our business is constructed. A lot of the work that we do is work that clients work with us on an ongoing basis. So sometimes when we see more and more of the digital work, even though those projects have a 3-year or 5-year or a 1-year duration, we see that once we are working with clients, whether it's on their cloud journey or the data analytics work, we continue to be working with them for a long period of time.
Sure. Also wanted to get a sense of, the onshore offsite mix, given that we're seeing a strong offshore, the mix coming close to about 75%. Is this going to be a model going forward as well, or is this a pandemic-driven kind of phenomena? Thank you.
What we've seen is over the last 9 months with COVID, the travel has been quite significantly restricted. And so in many ways, we've not sent people to work onshore. Having said that, we are recruiting because of our localization approach still quite a bit onshore as well. What also a large enterprise clients have observed is given that 97% of all of our employees are working remotely or working from home, they are more open to having all of the work being done in different locations. And hence, we see that movement on the on-site offshore mix. Of course, as the travel opens up, some of that will go back to where it was. But as a secular trend, we think the on-site mix will continue to be more and more efficient.
Thank you for answering those questions, Salil. We will now move on to the next question. It's from Shilpa Fadnis from the Science. Hi, Shilpa. Please go ahead.
Thank you. Many congratulations on a good set of numbers. So Infosys has turbocharged its large deal presence. What has changed in the structure and the go-to-market of the large deal teams? Do you see larger opportunities emerging from vendor consolidation and captive carve-out deals? Third, it appears that Infosys is operating on a two-engine proposition. One at 24% with large deals, you see very slim margins. Going forward, you have your wage hikes, travel will slowly pick up, and other cost overheads, including the seasonalities of ramp-ups and ramp-downs in large deals. Do you think margins at 24% is sustainable going forward?
Let me start with the large deal structure, and then on the margins, Nilanjan will add some color. On the large deal structure, we've shared this in the past. We've put in place this structure 2 or 3 years ago, where there's tremendous attention and focus to what clients' needs are. And we bring all of the capabilities of Infosys together when we work on those requirements. There's also a real attention to what is the method that specific client wants to engage with us on, and what is the best set of solutions from within our capabilities and sometimes with partners that we can develop. So that's a structure that's been in place for some time. As you know, we put in a significant investment about 3 years ago into building out that structure and sales capabilities. And fortunately, all of that over the last couple of years has given us good traction in the way that the large deals have come through. On the margin, I'll pass it on to Nilanjan.
To date. Sorry, I think I was on mute. Okay, so on the margins, as you know, we are on a year-to-date basis, 24.5%. And on a year-on-year for the quarter, we are by about 350 basis points. And this is, like I said, 3 reasons, the way we looked at the cost structure at the beginning of the year, the discretionary costs, which were around our payroll costs, around compensation hikes, around promotions. Then, of course, the cost cuts which we had done on travel, which we had done on our professional legal, on facilities. And, of course, finally, our strategic cost levers, which we believe are the long-term margin improvement drivers around offsite, on-site, offshore, the pyramid, automation, etc. So as we look into next year in Q4, yes, we will have the impact of wages coming in from Q4. And during the rest of the year, there may be some travel impact as the vaccines are rolled out across. But parallelly, we've seen that in this year as well. We've been able to deploy all our cost optimization levers quite aggressively during this time as well. So without giving a number on the guidance, I think we are quite confident that we have these cost optimization plans in place to negate some of the costs which we will see coming up.
Thank you so much. We'll take the next question now. It's coming from Sankalp from Reuters. Hi, Sankalp, please go ahead. Sankalp, you're on mute. Could you please unmute first? Sankalp, in case you're not able to hear us, the next question now coming from Sankalp from Reuters. Hi, Sankalp, please go ahead.
Hi. Good evening, everyone. I had.
Sankalp, you're on mute. Could you please unmute first?
Oh, actually, I'm unmuted.
We can hear you now, Sankalp. Please go ahead.
Hello. Can you hear me?
Yes. Yes. Go ahead.
Hello.
Yeah, we can hear you. Go ahead.
Can you hear me?
Yes, we can. Sankalp, we can hear you. Please go ahead.
Oh, that's. Hello. Can you hear me? You can't hear me.
We will try to get back to Sankalp, I think, a little later. He's having some audio-video issues.
Okay. Okay, great. So I was saying that, good evening, and, Salil, you and Praveen have said that. So you and Praveen have said that the growth is broad-based across verticals. I wanted to ask that going ahead this year, what are the verticals, or what are the business verticals where you see the most growth coming in? Because surely every industry will have different demands according to the pandemic. Some businesses will take faster to recover, while others may not take the same time. So which industries do you think are the ones that will spend more money in terms of the transformation that you talk about? That's one. The second thing I wanted to ask was about the visa thing. Now, with a new administration coming in the US, and your own hybrid model of sort of having people work from home as well as on site, I wanted to know how much of these visas will you keep applying for? Not in terms of the quantity. I mean, you've already reduced that, but I mean, how important is to send those many engineers or developers to the US now, given both the new administration and the work from home culture? And number three, I just wanted, Praveen, to sort of just reiterate those hiring numbers in terms of the fresh campus placements for both this year and the next that he spoke about. I missed those. Thank you.
Thanks. Let me start off on the industry.
Given both the new administration and the work from home culture. And number three, I just wanted, Praveen, to reiterate those in terms of the fresh.
Okay. Let me start off maybe on the industry question that you asked, and Praveen will provide some more color, and then the other points as well on visa and hiring numbers. What we are seeing, as you pointed out, was a broad-based growth across many industries. Now, the digital transformation work, the cloud movement, the work with data analytics is happening across all different industries. We've seen, as you know, in this Q3, a tremendous growth in our financial services business, which really is the largest industry vertical for us, and that bodes well for what we see in the future. But we've also seen and shared some of the large deals and new partnerships across many different industry segments. And so we still see this as being a broad-based growth dynamic across different industries. With that, let me pass it on to Praveen.
Yeah. Just to add a little bit more color, from an industry perspective, we feel a lot more optimistic about banking and financial services on the back of a lot of large deal wins. I earlier talked about manufacturing. Again, it had a fantastic quarter this quarter in terms of large deal wins as well as growth, and that momentum is likely to continue for the next few quarters. Retail, we have seen a second quarter in a row of sequential growth, and it has also on a year-on-year basis just turned positive. So hopefully we'll continue to see that traction. From a communication perspective, on the telecom side, we feel optimistic. We are seeing some growth. But on the media and entertainment side, we still see some softness. On the assured segment, on utility side, we are optimistic. We are seeing traction. We are also started seeing some good growth in oil and gas, even though the sector is a little bit depressed. We do though see continued challenges in the resources segment and in the services segment. And of course, life sciences and healthcare is also, given the pandemic and a lot of focus on health, we are optimistic about that segment. So by and large, as I said earlier, it's a broad-based thing. There are some sub-segments where we will see some softness, but it's really compensated by growth in other segments. Now on the visa front, as we said earlier, today we are fully de-risked from the visa because of our localization strategy. So we are less dependent on any visa rule changes or any regime. But said that when you are looking at the supply chain, you have to prepare yourself for multiple options. So one element of supply chain, when you have to fulfill on-site, one of the things is fulfilling through local hires, fulfilling through experienced hires locally. But one element of it is also fulfilling through sending people from India. Because at the end of the day, it's all about talent. So from that perspective, there will always be some part of the work that has to be done on-site closer to the client. So we'll always have some element of on-site. And on the on-site, you can either fulfill with people whom you have hired locally or by sending from India. So irrespective of the challenges, we want to be prepared, fully prepared, so that given the nature of demand, we have all options available for us to fulfill that. And I think those are the two things. And on the hiring numbers, okay, that was the third question. In terms of freshers in India next year, we are looking at hiring about 24,000.
Thank you so much for those answers, gentlemen. We'll now move on to the next question. It's coming from Ayushman Barua from Mint. Ayushman, please go ahead after you unmute it.
Hey, hi. Wishing you a happy new year to all of you. So my question is for Salil. How much of these new deal wins are from market share gains versus your customers moving to the cloud? And second is, do you see any competition from the global in-house centers or the GICs, because they also have big plans to come to India? Thank you.
There, what we see is both market share gain and also cloud work. What I mean is, we think that with the growth that we've seen over the last few quarters, which has been quite leading within the industry, and some of these wins that we are continuing to see, we will gain more and more market share. And then a lot of the work that we are doing, we described some of it this time, is focused on the cloud. It's focused on building solutions which are SaaS-based, infra as a service-based, private cloud-based, leveraging our Infosys Cobalt capability and getting that tremendous traction for that very early on. Sorry, what was the second point that you asked about?
Second was the competition from the GICs.
Yeah. So there, what we are seeing is there's always a sort of a different phases of building out GICs. In many cases, we partner very actively working with GICs, especially as there are new ones being built on new technologies or skills being developed and scaled up. In some instances, we also work where there is a move by large enterprises to move out of some of the GICs and into new areas where we've taken work which is jointly developing with the GICs. So it's both working jointly with them, or sometimes as large enterprises make decisions to move out of them, to take them over and then to transform them. Both of those sorts of activities are happening with our work with GIC.
Thank you.
Thank you so much. Let's take the next question now. It's coming from Nikita Periwal from Cogenesis. Hi, Nikita, please go ahead.
Hi, good evening.
So I noticed that a lot of your deal wins in this quarter are concentrated in the US, and growth in Europe has been relatively lower as compared to the overall growth, and particularly in the US. So in that context, I want to understand, get an outlook for the European region, especially for the retail and the financial services vertical. Second is your deal wins have been at an all-time high in this quarter and the previous. Can we expect a repeat in the March quarter as well?
I'll start with the second one, and actually, Praveen will have a lot more views on the first question that you asked. Will the next quarter be equally as large as this one or the previous one? Our attempt is to really work even more closely with our clients in their large transformation programs. As we've said sometimes in the past, these are not predictable when some of these things happen. We feel very good with really a tremendous amount of these partnership wins over the last 2 quarters. If you take a more annual view, we feel very strongly that sort of attraction will continue. But quarter to quarter, sometimes things will be more up and down in terms of large deal values. So I have no specific comment on the March quarter, but we are overall very positive and optimistic about the pipeline and the outlook. Praveen on the European side and the other side.
I think in the last couple of quarters, the number of large deal wins have been higher in US than in Europe. But however, it's not a secular trend. In fact, in this quarter, if you look at it, one of the largest deal wins in Infosys history was in Europe from that perspective. So we expect the momentum from Europe to continue as well. And for instance, if you look at BFSI segment, some of the spend has come back much more aggressively in US banks than in European banks. But again, it's a matter of time before we expect spend to come back in Europe as well. So I would not call it as a secular trend. In the last couple of quarters, we have seen probably much more traction in Americas, but we do expect traction to pick up in Europe as well going forward.
Thank you so much. Our next question now is from Joshelle Mendonca from ET Prime. Hi, Joshelle, please unmute and go ahead.
Hello, thank you so much for taking my questions. I just have 2. We are seeing across the industry really low attrition, and as you said, uncomfortably high utilization. Are you concerned about supply constraints as demand continues to increase? Do you foresee any kind of war on talent? If yes, are you taking steps to mitigate that? My second question is, as you talked about building the pyramid on site in the local markets, how are you looking at creating career progression for those employees? We have heard some IT companies talk about focusing on national diversity, in client-facing roles. Is Infosys looking at any metric like that? Thank you.
I'll request Praveen to address those points. Praveen, please go ahead.
Yeah. On the from a career progression perspective, the second point, we are obviously creating a lot of specialist roles given the nature of demand that we are seeing and how the industry and itself. I think of much more hierarchical. Today, I think we are a much more flatter organization, a lot more newer roles and other things. And in fact, from our own perspective, over a period of time, we have reskilled. While digital has grown from 25% of our business 3 years back to about over 50%, more than 80% of the talent required for fulfilling the digital needs have been done through reskilling and returning our own people. So from that perspective, there is a lot of opportunity for people to get into newer careers, become future ready, get trained on newer technologies and so on. So that's where we are focusing on. And from overall supply chain perspective, it's definitely utilization is very high, and as I said earlier, we are not comfortable with it. So we are really looking at much more aggressive hiring from people from the campuses, training them and deploying them on projects to bring down utilization. And it will also help in backfilling the increased attrition that we we're likely to anticipate. That has always been a model in our history. I don't think we are worried. We are comfortable with it. We have always created our own talent. We have invested a lot in training. And even if we wanted to, I don't think there is enough talent available in the market for the kind of skills we are talking about. We have to reskill, we have to train. And we have a fantastic engine running. It's been there for several years, and we are pretty comfortable with it.
Thank you for the question, Jushal, and thank you for answering, gentlemen. We'll now take the next question from Supriya Roy from Tech Circle. Hi, Supriya, please go ahead.
Hi, good evening, everyone. I hope the new year started on some of the other favorable note on everyone's end. And congratulations on having maintained the 25% in terms of the operating margin. Now, my first question is to do with, in backdrop of all these mega deal wins, I want to know how at Infosys how does the bifurcation between core service offerings and digital offerings revenue-wise occur? So beyond the digital transformation nomenclature, I want to know how are the client deliverables at the end of the day usually mapped on to trying in understanding how much of the revenue goes in digital and how much the other bit goes to core. This against a lot of activity with the whole captive deal trends on and about in the recent past. So if you could give me some color on how it's computed, digital versus core at Infosys.
Sure. Sorry.
Yeah, do I go ahead with the other question as well, or do I keep it for later?
Let me go ahead with the answer, and then you can come back to the next one, please. The way we look at the digital versus core, we put together a fairly detailed and public definition of what we call digital. And this is encapsulated in the pentagon that we had shared, which looks at different elements of digital. Within that, we have then described sub-components of digital for each of those larger elements. And then we mapped it to the project level of each of the projects that the company is delivering for clients. And this was started just about 3.5 years ago. And that has helped us to make sure that the digital revenue that we share is much more bottom-up. And as Nilanjan shared earlier on in the session, is something that we remain consistent with as the time in the last 3 years have gone. And that gives us a way internally to measure it, and of course externally to share with you how that's progressing.
Okay, I'll quickly just draw across a follow-up on that first bit and then go on with my second questions. On the bifurcation, I want to know the way that you compute the revenues that come from the digital end. Is it in the same base in the core, in the sense that you're looking at the number of man hours deployed on a particular project versus, say, for example, you're looking at the final outcome upon which the client deliverables are mapped and then the revenues counted on that? That's the follow-up on the first. And the second question is, Praveen's mentioned several times about the broad-based growth on a sectoral analysis, of course. And he's also mentioned about the hiccups in the manufacturing end on that bit. But going deeper down on a sectoral analysis, I want to understand over the last 2-3 quarters, is it a prototype of a playout, say, for example, in the overall macro IT services sector, in the sense that 5 years ago, maybe a lot of the major IT players had lost out on a lot of the digital transformation deals to, say, emerging startups operating across different domains of staff. So has that played out in this one particular year, in the sense that a lot of the backlog, say, for example, if a growth in the BFI sector should have been, say 5%, instead it was a 2%, and then it was again a 2% in the following quarter, and then right now what's been arrived at on a sectoral basis is a recovery rather than a growth on a sequential basis throughout the year, given the whole pandemic play at the back. That's my question. And the third question is to do with, I want to know, towards the year end of 2019, there's a lot of initiatives in terms of the skilling and reward scheme that was meted out to try and control the attrition rate. So how's that worked out? These will be all my questions.
Let me address the follow-up, and then the other two, Praveen will share his views on those. On the follow-up, the way we compute the revenue, it's really a function of what that specific project looks like Sometimes there's based on the number of hours, sometimes is based on a fixed contractual value, sometimes it's based on what is the sort of outcome or deliverable we are providing to clients. But these are well defined ahead of time, and then our finance teams apply that method and in a consistent way report that split of the revenue. Praveen, over to you.
Yeah, on the reward and recognition, obviously, I mean, this is a journey. This is something we need to continue to focus on. And during the pandemic, there has been enhanced focus on engagement with employees, both on physical as well as on the virtual level. It's not only about physical, but it's also about emotional and social connect and so on. We have launched more than 150 plus interventions, had a lot of podcasts, external engagement, external speakers and other things. So a lot of activities on the engagement side. We have also come up with a 5C framework, which what 5 Cs are really: connect, collaborate, celebrate, culture and care. So there are a lot of interventions in each of these 5C dimensions. I mean, this is something we have always focused on, because at the end of the day, we are a people business, we are a people industry. So we need to continue to evolve and continue to make sure we engage with people. Our people are very happy and contented. So a lot of focus, a lot of activities, and those will continue.
Thank you so much for those answers. Now, since he couldn't join us then from Money Control, I'm going to read out her questions. Our first question is, could you give a sense of what's driving the BFSI growth, which has seen double-digit growth in Q3? Second question is, your peer has said they're looking at double-digit growth in FY22. Could you share if you're seeing double-digit growth trajectory as well? And the last question is, last quarter, Infosys had said fresher hiring would be 15,000. Could you share some insight on the increase to 24,000?
Let me start with the second point. Yes, we see with all of the momentum and the large deals, we see next year as a double-digit growth year from everything that we are seeing in the market today. And we have a tremendous amount of positive news in terms of large deals, wins, and the momentum that we've built. On the financial services and on the fresher hiring, I'll just pass it to Praveen, please.
Yeah. See, on the financial services, as I mentioned earlier, we had a record quarter-on-quarter and year-on-year growth for Q3. It's a combination of ramp-up from wins we had in previous quarters. It's a combination of some of the new deal wins we had in some of the subsegments like wealth and retirement services, mortgages, regional banks, and so on. And thirdly, it's also about accelerating digital transformation agenda of our clients. We are seeing a lot of opportunities in the areas of cloud, in the areas of data services. We are also seeing a lot of opportunities around building capabilities for the clients in the digital banking space. So strong traction on the banking side. To some extent on the capital markets and cards and payment, it's a little bit muted, but compensated by very strong traction on banking. And on the other question was on 24 on the fresher hiring. And this quarter, I mean, we have seen tremendous growth. As we said, it's a record growth for this Q3. And given the growth momentum that we are seeing, given the high utilization and position that attrition can probably pick up, considering all these factors, we have increased the fresher hiring to 24,000 in the next year, coming year.
Thanks a lot, and that concludes our Q&A segment for today. Salil, Praveen, and Nilanjan, thank you so very much for taking those questions and answering each of those so patiently.
Thank you.
Thank you. Thank you, everyone. Thanks very much.
Before we sign off, here's something for you to note. The archived webcast of this press conference will be available on the Infosys website and on our YouTube channel later today. Thank you once again for joining us. Have a wonderful evening ahead.